On April the 2nd, 1792, the Coinage Act stated that gold eagles, which were denominated for $10 to contain 247.5 grains of pure gold. Otherwise, silver dollars containing 371.25 grains of silver, and copper for pennies and half pennies as well. As I go through the timeline of gold, I may miss some key dates, but I want to give as much of the key information as well as I can in hopefully under 10 minutes. So when we take a look at the grains of pure gold and silver that people were getting, this meant that your money was backed by what you were holding, that of the gold and silver. Grains is a measure of unit, and it takes 480 of them to equal a troy ounce, stating gold to be 1939 back then and silver as 129. There have been many other coinage acts that have taken place. This would be the list of them, the final one being taking your silver away from your dimes and quarters. In 1834, that essentially changed the price of gold to 2067, and this was on June the 28th of that year. And on March the 3rd, 1863, gold certificates, and shortly after this bill, paper money was born in the United States, which allowed for convenient transfer. Certificates were issued where you could redeem your gold at any time. If you had a $50 certificate, then you were able to exchange this for, 2.5 eagles or 50 silver dollars, and this lasted until 1933. Now, it stated you had to exchange it for gold, but because this was an easy way to exchange silver and gold, and the measurement now being dollars, a form of measurement or calculation, and $1 would equal that of one gold eagle, and its weight, and same thing with the silver, and so on. So it was easy to make those change. Maybe you might have changed $50 for one eagle, which is $20, and 30 silver dollars for 30, as an example. But moving on to 1913, December the 23rd, the Federal Reserve Act was set in place. And this allowed the Federal Reserve to grant them legal authority to issue their notes, which is now known as the U.S. dollar. And this was signed when there was just a little over a day until Christmas, which I find interestingly enough. Moving on to 2 months later, March the 9th, 1933, the Emergency Banking Act, which was originally titled the Emergency Banking Relief Act, as this was a time when stock markets had lost well over 80% of its value, closer to 90% from its top and its low, and the way deflation was hitting rampant, but that also meant loss of jobs and loss of pay rates for those who did manage to hang on or receive jobs. And this now stated that, we can try to fix the problem. At least that's what they were trying to portray within this bill. And what this bill did was say, only the banks we approve of are going to operate. Okay, so that means the banks that, if we don't think they're worthy, we'll just not allow them. It's more of a control measure, I think, more than anything. The next month, April the 5th, Executive Order 6102, U.S. President Franklin D. Roosevelt, FDR, forbid the hoarding of gold coin, bullion, and certificates. Citizens had until May the 1st of 1933 to turn them into any bank outlet and redeem them for the value of gold, which at that time was $20.67 an ounce. Roosevelt began his tenure on the 4th of March as, the Emergency Banking Relief Act occurred within his first week, and this followed through after his first month in office. And the next one is just a year later, January the 31st, 1934. And that's when the U.S. Gold Reserve Act required that all gold and gold certificates held by the Federal Reserve be surrendered and vested in the sole title of the U.S. Department of Treasury. Basically, we're just saying that these things are worthless. But if you got them, you can trade them in, and it's $20.67 for gold, but they were forced to do it because of that very reason. And at this time, they also bumped up the price close to double, up to $35, almost 75% increase, and that's what they pegged the price of gold to be. November 1961. In the previous year, the price of gold on the London Exchange reached $40, which is $5 greater than the fixed target price by the central bank. This started the London Gold Pool in an attempt to keep the price fixed at the $35 level. That quick spike in 1960 to 40, well, that just created this. However, on Sunday, March 17, 1968, that was a date that the London Gold Pool had collapsed. Trading was suspended for the remainder of the month, and the 25% backing of gold reserves was removed by Congress on the very next day from the collapse, on Monday, the 18th of March. On April the 1st, the price of gold was up $3 from $35 to $38 and stayed in a range from $38 to $42 the rest of the year. August 15th, 1971, the Nixon shock. President Nixon closed the gold window, essentially taking the world off of the gold standard. Gold was priced at $43 an ounce and would not rise until the first trading day of 1972. So we see that the price has went up just a little bit from the last update, and now it's not going up for the rest of the year, as it went down to 40 and 41, 42. I guess the people didn't really want to buy because I guess they didn't know what this whole temporarily going off would mean. But then again, it was illegal, actually, to buy. Yeah. However, on January the 1st, 1975, gold once again is now legal for USA citizens. Gold had once become legal with the price set at $186.50 an ounce as the closing 1974 level. So, we've seen after the Nixon shock that the prices have doubled twice, and now you can buy it. So if they took it away from you in 33 when it was a little over 20, and now they're letting you back in and start at 75 when it's 186.5. But that was the top, and a bear market had now started with a 103 price level in August of 76, and a high that was taken out a little over 3 years later on March the 8th, 1978. And I'm sure that there's a lot of people that were like, oh yeah, let's get gold, and it's been going up, and yeah, and then people are like, oh man, but maybe we shouldn't have done this, yeah, this is just a dumb play. And I'm sure that there were some people who were thinking that. January 21st, 1980, the price of gold reached $850, which is almost a 25 times gain on the fixed price established from 1933. It would take 28 years going to January of 2008 to finally make a new high. Date unknown. Gold trading, as well as other markets and commodities, has evolved to different propositions like futures and options, leverage, high-frequency tradings, derivatives, etc. The GLD Exchange Traded Fund, which was launched on November 18th, 2004 by iShares, and it mirrors the gold price by less than 10%. Basically, this means you need about 10.25 ounces for an ounce of gold, or 10.25 shares, for an ounce of gold, or 41 shares for 4 ounces of gold. July 13th, 2011, gold not money. Although no act or bill was signed, Federal Reserve Chairman Ben Bernanke stated no to the question of, is gold money? He further stated that they are held by central banks for that of a long-term tradition.